Hey everybody, Boris. Welcome to the weekly technicals for Euro dollar, dollar yen, pound dollar for January 23rd to 27th. The theme of the week, I think, is going to be Trump dump. As I complete this video on Friday afternoon in New York City, Trump has just finished his inauguration speech, and as you can see, the market reaction against the dollar has not been positive, mainly because the speech was actually very confrontational. The speech was muscular, it was very protectionist, and it pretty much really underscored the worst of Trump's political instincts, in a sense that it was highly non-conciliatory. And I think the markets at this point were looking for a more conciliatory, more growth-oriented speech, and it became a much more protectionist speech. As a result, you start to see the dollar sell off into the weekend, and I think it's sending some very powerful negative technical signals as the week comes to a close. Let's take a look at the charts here and see where the support resistance points lie and why I think next week could set up as a potential correction week for the dollar. So euro dollar, the resistance now is up to 108, the support is 105, and it looks quite good on the charts. We'll get through it in just one second. Dollar yen is the absolute key tell here. The fact that we could not hold 115 today, and the fact that we're ending up now at the lows of the day around 114.35 is a very ominous technical sign, with 13 now as the next level of support and possibly opening up the way for a full run down to the 111 level. And cable, its own story, of course, with 125, the resistance, 122 support. Let's take a look at the charts and kind of just see where everything sets up as far as techs and fundamentals go. So the euro is making its third foray into this 107 level, big resistance level, of course, over here. We have this, by the way, against a relatively dovish Mario Draghi that came out this week and tried to talk the currency down. And the fact that it didn't go down on his talk is emblematic of the fact, I think, that euro has some underlying strength. Secondly, when you look at it technically, the series of higher lows here suggested that the uptrend is quite strong and that there are buyers all the way down the chain here. The break above the 107, if it happens early next week, really puts us square up into this very key resistance area of the 108, 109. Now, this 108, 109 was a massive turn to the downside. This was the big downside signal after the December ECB presser when Draghi really talked the currency down. If we recover this particular area, that's going to stop out a lot of long-term shorts and provide fuel for even further squeeze all the way up to 109. I think in many ways, euro is creating this very stealth short covering possibility, and the euro could explode to the upside, just as it typically does without much provocation, if it starts to trigger a lot of these short covering areas around this level. So I'm watching for an explosion here. It's not by any means a primary scenario, but it's a possible scenario, and I really like it to the long side here as it tries to peak above the 107s. Only a complete rejection, a move back below the 106, sort of towards the 105 level, would negate the longer term upside price action and would suggest that we have a fresh dollar flows coming into the market. Right now, the dollar looks very tired and very much under a serious threat. The biggest signal of threat is this failure of dollar yen to trade back up above 115. The fact that despite the fact that we had all the Fed officials provide all sorts of hawkish commentary, the U.S. economic data relatively healthy, the market basically is not believing that Trump trade is sustainable. And the reason why they're not believing it is because as he takes the reins of power, his political rhetoric is just too harsh. It is not conciliatory enough. Remember that in free markets, trade is absolutely the essence, the lifeblood of the market, especially in the currency market. If you're going to come in and essentially preach war, markets hate that. They turn into a porcupine. And it's exactly what you're seeing here. You're seeing the market sort of pause, sell off, and now find some serious amount of disappointment. Now, you still have quite a lot of support here around this 1250 level, but that's going to be a key area. If the market guns towards the stops over here and those stops are given, we really have nothing until the 110 in terms of support. Dollar yen likes to trade in these nickel increments, right? It likes to trade in this 110, 115, 115, 120 level. We failed the 120 level. We're now back into the 115, 110 level and starting to, again, fail towards the 110 zone. So I'm watching this very carefully. The only thing that would negate my complete view of a negative dollar trade is if we close above 1550. We need to really break above here, do a complete squeeze on any of the dollar shorts here, and resume the trend towards the 1850. Only then can you believe that the dollar rally is revived. For now, the benefit of doubt is to the short side. You have to believe that the dollar is a sell. Cable is its own story. It has its own dynamic this week, especially because it's very likely the UK Supreme Court is also going to be ruling, and it's quite likely the UK Supreme Court is going to rule that Brexit is going to require a parliamentary vote. That's actually pound bullish because the parliamentary vote delays UK's exit from EU, may even threaten the possibility of Brexit because if the Parliament does not approve it, it could require perhaps a second referendum and sends the whole issue back. We'll see if that scenario kind of develops. But what you can see from a technical point of view is that pound has actually made a very, very bullish bottom here, very bullish double bottom. Looks ready to explode to the upside. 125 is a near-term resist, and 127 is the really longer-term goal here. Pound also looks quite good today on a technical basis where we dipped below 23. It came right back up. The squeeze higher suggests that there's more continuation. Pound, both technically and fundamentally, could be another one of those kind of explosive trades to the upside. If 124 goes as Monday comes around, it's very likely we're going to see 125 before even the end of the day. So I'm watching all of these. Technically, you're basically seeing the dollar break down, the euro and the pound ready to explode. Unless we have a complete reversal of flows on Monday, you have to trade to that particular direction as the week opens up for trading. Wish you guys the best luck, the best trading. Boris, over and out.